morning. You're watching Businessworld Live. I'm Danny Laurel. It's the start of a new trading day. Let's get off with our banner story. The Duterte administration will submit to Congress a record 5.024 trillion peso national budget for next year, with nearly 2 trillion pesos allocated for social services, which include pandemic response. Now, the proposed general appropriations measure is 11.5% higher than this year's budget of 4.51 trillion pesos. Presidential spokesperson Harry Roque said social services will get 1.92 trillion pesos, or over 39% of that budget. Funds will be used to implement the Universal Healthcare Act, free college tuition for state universities and colleges, as well as the purchase of COVID-19 vaccines and personal protective equipment for healthcare workers. The economic services sector, which includes the Build program, will receive a funding of over 1.47 trillion pesos. UP political science professor Maria Ella Atienza believes the 2022 spending plan will face strong scrutiny from lawmakers after the Commission on Audit flagged the unmaximized budgets of several agencies. Now, the interagency DBCC is set to review its growth targets and macroeconomic assumptions in a meeting today. That's in light of the fresh round of lockdowns in parts of the country. NEDA estimates that the economy loses around 151 billion pesos in potential output each week the government places Metro Manila under HCQ. Now, in a special meeting a month ago, the DBCC retained its 6 to 7% growth target for the year after the easing of lockdown measures amid a pickup in the vaccination rollout. It also kept the 7 to 9% growth target for 2022 and a 6 to 7% expansion each year for 2023 to 2024. But Finance Secretary Sonny Dominguez said they will now be reviewing all of the macro assumptions and projections based on the GDP numbers and on account of the new lockdown. Meanwhile, economists have already slashed their 2021 economic projections again due to the impact of the ECQ. Economists surveyed by Bloomberg see the country's GDP expanding by 4.9% this year, which is below the low end of the official 6 to 7% target range. That figure is also down at 0.6 percentage points from the May estimate, while growth forecasts for the third quarter alone were slashed by 2 percentage points to 5.6%. Okay, guys, checking in on the markets. Let's kick off with a check on Wall Street overnight. You can see that on my terminal here, the S&P 500 having the biggest decline we've seen in over a month, and Asian stocks are looked to come under pressure today. That's after, of course, the U.S. suffered their worst drop. That was on concern of course, resurgence in coronavirus cases might be hurting the economic recovery over there. A big thing that investors are watching over in the U.S. is the release of the latest Fed statements. They're also looking whether inflation over in the U.S. is transitory, and other investors are saying that the rally in global stocks is now due for a pause. Now, recall that global stocks have rallied around 90% from the last year's pandemic lows. You can see quite a mixed picture over in Asia, with Taiwan's TAIEX down by 0.7%, whereas over in Japan you can see some gains. Now, let's take a look at how our own index is performing. Good to note that we are 12.6 points up. That's 0.2%, closing in on those 6,600 levels here. So still a bit of a recovery play, at least when you take a look at the 3-day chart here. Let's take a look at which ones are bringing up the boards. Recall that there had been, a shifting, especially when it came to the holding firms and those which were deleted or at least reduced in terms of weighting in the index players. You can see Bloomberry up by 2%, followed by Ayala Corp and Mega World, as well as Ayala Land. So quite a property play this morning in terms of gainers. On the other end, you've got Meralco suffering the most, followed by Alliance Global and ICTSI. Now, a very interesting thing to note is that we are looking at much more fundraising in the market, despite, of course, that volatility in different shapes and forms. You've got Ayala Land planning an additional 9 billion pesos in debt. That's for refinancing. Now, that was already approved by the board. They're going to be doing retail bonds, corporate notes, and loans, and that will bring the lender's approval for debt to 50 billion pesos. And they are saying that will be funding general requirements. Ayala Land up, as I mentioned, one of the best performers now, up by 0.8%. Now, another one to be selling shares and raising some money, that is PH Resorts. That is, of course, Dennis Uys Casino venture. They've approved, the board has approved the plan to sell shares that will be through a top-up placement. And that will be offered by Udena, which is, of course, Dennis Uys holding company. That, however, is trading flat right now. 1 peso and 64 centavos. And finally, one other one that is looking for liquidity, that is Emperador. They're going ahead with that Singapore listing by way of introduction. They did mention this already over in July, and they were looking at raising around 1 billion Singapore dollars over there. And just to note, you can see on the terminal here that the shares of Emperador have risen around 20% so far year to date, and that might be giving the brandy maker a market value of around 190 billion pesos, while they plan to list, which they did mention might happen before the end of the year. Emperador up by a hefty 5.8% to 15 pesos. Still no shortage of fundraising, and the REIT market is piping hot. Here with us to share their share of the spotlight, we have with us Jericho Go. He is Robinson's Commercial REIT President and CEO. Good morning, Sir Jericho, and welcome to Businessworld Live.
Morning, Dan.
Sir, a lot of offers in the markets, very exciting times, despite, of course, all of the turbulence here. But you are saying that your REIT, of course, RL Commercial REIT, or RCR, is set to be the largest Filipino REIT. It's also set to have the longest land lease tenure and the widest geographical coverage. Give us a more tangible idea of what you mean by this and why this REIT will be different compared to the others.
Okay, Danny, thank you for the opportunity and thank you for having us on your show. You mentioned that RL Commercial REIT Inc. or RCR for short. We do have several key takeaways, for our RCR, and top of which is the largest, in terms of market capitalization. That's about 72.7 billion pesos, and at the up to maximum offer price. We also have the biggest in terms of portfolio size, about 425,000 square meters of gross leasable area. Another key factor is the widest in terms of geographical coverage. We are in 9 cities, Luzon, Visayas, and Mindanao, and majority of our property, 94%, are in Metro Manila, in the top 3 CBDs, of Ortigas, Makati, and Fort Bonifacio. Definitely longest in terms of land lease tenure of up to 99 years, with an average land lease tenure of 89 years across all properties. The other thing I wanted to add is we also have an excellent expansion pipeline. We do have additional projects that are in the pipeline that can help grow RCR by almost double the size, in about 4 to 5 years' time.
Okay, so very interesting points you've made there, sir. But, sir, you mentioned high quality assets. Of course, during normal times, there would be no doubt, and you've proven that time and again with the parent company. But in these times, even commercial properties are highly contentious. There's a possibility, of course, for the tenancy rates to drop. And you, as you mentioned, are well diversified. But tell us, why is the timing right now to be doing this and for investors to be looking at commercial properties?
Well, first of all, let me talk about our properties. The properties are all properties, 14 assets are all PESA registered. And when you say PESA registered, essentially you're catering to the IT, BPM, or BPO market. BPO has been adjudged as essential services. That's why they continue to operate even at this time. So that is very important. The other thing is, I think we've seen the future, and the future is talking about sustainability. So we have in our Bridgetown Destination Estate, we have Exa Zeta and the Terra Towers that are already LEED accredited, LEED certified, LEED Silver, and LEED Gold. So we're talking about being able to reduce our carbon footprint while at the same time providing advantages for our tenants or occupiers, because according to the US Green Building Council, you are able to help reduce electricity costs by up to 25% and water utilization by 12%.
Okay, sir, you mentioned that you're, of course, in the process of pricing this REIT IPO. The final price will be on August 20, the listing on September 14. You're looking at a maximum price of 7 pesos and 31 centavos per share. At this price, what would be the yield that investors can expect, this year and next year, and how sure can they be about this yield?
Danny, I think what we need to say here, we're actually under regulations right now, and there are certain sensitivities there. But what is important here is that REIT in itself is an income generating asset. And because we already have tenants in our buildings with very high occupancy rate, you already are guaranteed of a steady income stream. And at the same time, we have built in 3 to 5% annual rental escalation. And earlier, I already mentioned to you the expansion pipeline. So I think when you look at all of these things, definitely investment instruments have different levels of risk, no? But I think with what we've mentioned, this is actually a very good value proposition.
Sir, are you not afraid of the volatility in the market, especially there's a lot of instruments here and you are asking for quite some liquidity here. This time frame, or why go ahead with this time frame right now given the volatile markets?
For us, I think this is definitely part of our commitment to our country, in as much as it is important to RCR. But once you are able to generate, once we are able to generate these funds, please remember, that in the REIT law, you will have to reinvest all of those proceeds, in the country, in the Philippines. At a time when there are a lot of jobs being lost, I think it is important that we really become undeterred, when it comes to our pursuit of our listing. We want to be able to contribute to nation building by building more projects and therefore helping create jobs and helping restart the economy.
Okay, so just keep on keeping on. As you mentioned, we do need to keep the wheels turning. And finally, sir, just more clarity on the use of the proceeds and how this would benefit the REIT investors. What can they expect for you to be using these proceeds for? And how will this also benefit just Robinson's Land as a parent company?
Again, as I mentioned, no, definitely we're looking at investing in projects. A lot of these things, again, we're under regulatory supervisions and the things that we need to be careful about. But one thing is for sure, these proceeds will not be used to pay for debt.
Okay, so that is already clear. There are, of course, other assets that you've already mentioned that will still be on the pipeline and can be added in addition to these 14 assets. And you did mention that the timing is right. Despite the market volatility, it's still time to be going for that and to be investing in the economy. Thank you so much for those insights. That was, of course, Jericho Go, Robinson's Commercial REIT President and CEO. Here are other headlines we're keeping our eyes on. Heads up, TikTokerists. Regulators will now be requiring social media influencers to register with the government and pay the required taxes. Finance Undersecretary Antoinette Tiongco said regulators aim to expand the tax base in digital platforms as consumers and firms move transactions online to eliminate risks connected with physical contact. Tiongco added that the BIR has already issued an RMC on influencers to register and pay their taxes. The official said the government would be able to estimate how large the digital economy has become by demanding online business owners to submit income returns and fulfill their financial obligations like regular taxpayers. Now, the Energy Department says it does not expect power outages to disrupt the Luzon power grid during the election season. The agency says yellow alerts are unlikely during this period. This as NGCP data shows sufficient reserves with which are all above the yellow alert level for the election week. DOE spokesperson William Fuentebella said he expects a thinning of reserves between May to June next year, but no yellow alerts will likely be placed on the Luzon grid on election week. And that's the first look into the business day. Today is Wednesday, August 18, 2021. Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.